What's going on, guys? In this video, we're going to be taking a look at everything that you need to know about cryptocurrency and taxes. That's right, it's tax time, and the IRS is coming for your gains. Now let me just calm down a little bit and take it one step at a time. So go ahead and smash up the like button, hit that subscribe button if you're new to the channel, and we're going to jump into it. Alright guys, so the first thing that we need to do when talking about cryptocurrency and taxes to prepare ourselves is crack open a nice cold beer and take one good drink. Just one is all you need to really prepare yourself for this. So cheers guys. So here are the important tax related things you need to know about cryptocurrency, whether you trade it or simply use it to buy your morning coffee. So yes, cryptocurrency is taxable. IRS views cryptocurrency as a capital asset, meaning there are taxes to be paid on any gains, but other actions can also trigger tax on cryptocurrencies, and you should be prepared to declare any such transactions when you file your taxes. Cryptocurrency is taxed as a capital gain if you sell it. If you buy crypto and then sell it, from a tax perspective, you'll be taxed the same as if your cryptocurrency was a stock. In other words, you'll pay short-term capital gains tax if you held the security for 1 year or less. In other words, you'll owe long-term capital gains tax if you held your position for longer than 1 year. The long-term capital gains tax rate is more favorable for most taxpayers, as it tops out on most transactions at 15% for single filers with an average gross income of $40,400 or less, or $80,800 or less for joint filers. The long-term capital gains rate drops to 0%. Short-term capital gains, on the other hand, are taxed at the ordinary income tax rate. And you'll also owe tax if you use cryptocurrency to purchase anything else. Planning to use your crypto to purchase things like your daily latte or some new clothes? You better plan on recording the details of that transaction as well, because if you use crypto to purchase goods or services, you're technically converting your crypto into dollars and then using those dollars to make your purchases. So in other words, the IRS views purchases with crypto as sales of crypto. If your crypto is worth more than when you bought it, that transaction becomes a taxable gain. So mined crypto is taxed as ordinary income. So if you successfully mine cryptocurrency, you're rewarded with coins or tokens for your efforts. In a sense, you're being paid a financial reward for the work you do for the blockchain. The IRS views these payouts as taxable income, and you'll owe ordinary income tax on the value of what you receive, even if you don't sell it, which is a little ridiculous. If you do ultimately sell that cryptocurrency, you might also be subject to capital gains taxes if its value has risen since you received it, so getting taxed left and right. But on the other hand, buying crypto with US dollars has no immediate tax consequence, so if you simply buy cryptocurrency, you won't have to report that transaction to the government, and there is no taxation involved. Theoretically, you can avoid taxation on your cryptocurrency forever if you simply hold it. That's a good incentive for hodling, right guys? You'll only be taxed on your crypto if you sell or exchange it at a gain in the future. So when it comes down to reporting and keeping up with your transactions, since cryptocurrency exchanges are still in their infancy for the most part, you shouldn't expect them to provide you with any year-end tax information regarding your crypto holdings or transactions. The same was true in the early days of these stock brokerages. But whereas brokerage firms now provide customers with transaction data and gain loss information regarding their holdings, most crypto exchanges still do not. This may change in the future, but for now, you should take heed and take care to record all of your transactions on your own, particularly when it comes to calculating taxable gains and losses. Now, this brings me to something that is actually very interesting, and it's a tool that I actually use myself as well, and that is Cointracker.io. Guys, you can check that out. I might leave a link in the description also, and I'll take a look at that here in just a second. But Cointracker actually allows you to use your API keys to connect all your exchanges or wallets or whatever to Cointracker, and it automatically, the AI system automatically keeps track of all your transactions for you. And at the end of the year, you can download a document showing your total gains and losses and your transaction history for up to 3,000 transactions, and I do believe you can do that for free for up to 3,000 transactions, and anything over that I think you will have to pay for the document. But it's a very good way to keep track of your transactions and your gains and losses for the year without having to do so yourself. And it also makes it easier come tax time, because personally I would rather trust Cointracker calculating my gains and losses than just handing over an enormous list of thousands of transactions to these tax preparers that have only been doing cryptocurrency taxes for a couple of years now, and trusting them with getting with getting it right. Obviously, they're tax preparers. They have to. They're committed. They have to be accurate, right? Or they could possibly get in trouble, most likely. But still, for me, I think it's better if you just keep track of it yourself, and using Cointracker.io is a great way to do so. So you may be asking, what forms will you need to file when it comes to your 2021, 2022 taxes? So your crypto transactions, including amounts and dates, should be reported on Form 8949. Ultimately, this information will transfer to your Schedule D, where all of your capital gains and losses will appear. Crypto you earned from mining should usually appear on Schedule C if you're running your mining operations as a business. In this case, you'll likely be liable for self-employment tax as well. If you can demonstrate that crypto mining is simply a hobby, you'll report that crypto income on line 8 of the Schedule 1. Obviously, as crypto continues and as crypto taxes continue to get more complicated, you'll likely want to consult with a tax advisor for the specific answers regarding your crypto tax filing questions. Another question you might ask yourself, do you have to report when you pay someone else in cryptocurrency? So whether you're an employer hiring a salaried worker or a client paying a contractor, you have to declare the payments you make to the IRS. This is true whether you make your payments in US dollars or cryptocurrency. For employees, you'll have to report the income you pay out on a W-2. If you pay a contractor, you'll have to issue a Form 1099. And probably one of the biggest questions on everyone's mind, legal ways to avoid or reduce your crypto taxes. So as mentioned above and previously, guys, if you simply hold your crypto until you die, you'll never have to pay anything to the IRS. However, another way to reduce your crypto taxes is to hold your positions longer than 1 year so you can benefit from lower long-term capital gains tax rates. So it pays to HODL. And one big thing to note, guys, and to be aware of, is the fact that the IRS has pledged to crack down on crypto taxation. Through its own admission, the IRS has been uncharacteristically lax when it comes to the enforcement of crypto taxation. However, the agency is approaching the issue with renewed vigor in 2022, so if you've escaped taxation in the past, you shouldn't expect to do so going forward. For starters, taxpayers must now check a box on their 1040 tax forms to indicate if they have engaged in any digital currency transactions during the year, as has been a requirement since 2019. The IRS compares these answers with the knowledge it receives about large crypto transactions on exchanges to help it locate unreported crypto gains. It also uses other enforcement actions that it may not share with the general public. In short, the IRS is aware of the vast amount of unreported crypto profits, so reporting your transactions in compliance with the law is the best way to avoid any type of issues with the IRS, and we all know we don't want any issues with the IRS. Thanks for watching, guys. I hope you enjoyed this video explaining a few things about your taxes when it comes to cryptocurrency. This was an article over on MSN.com. I give all credit to the information to MSN.com. It was a very good article. I'll leave links in the description to that. I'll also leave a link in the description to Cointracker, but you can just go to Cointracker.io if you want to check it out. It is a great way to keep track of your transactions, and it makes things a lot easier come tax time. So thanks for watching. Subscribe to the channel if you're new. Hit that like button if you haven't yet, and come check out this video right here.